Right, everybody. Thank you for joining the podcast. We have Nate Dodson here. He is a real investing attorney. He helps people actually raise capital for their investment opportunities. And he comes from crowdfunding lawyers. He has an awesome way to get capital for your deals. And we're gonna have a great conversation today. So, Nate, glad you're here.
I'm happy to be here. And let me give you a little bit of clarity. Hey, we're attorneys. We help you raise capital compliantly and legally for your deal. There's new ways to go about it that have never been available at any time legally in history. So that's really where a lot of the kind of online and outreach strategies that now we can leverage is really where we focus and see the most success.
I love that. Like, where do you think this new strategy is coming into play right now? I have a couple questions for you, but that is an interesting statement, Nate, and I would love to educate our audience on what is the new way of getting capital now.
Well, sounds good. Well, I'll start with traditionally, it's friends and family. Who do you know who's in your Rolodex, who's in your cell phone to actually talk to?
Right.
Eventually, you grow big enough and you run out of numbers. And that's where really crowdfunding, raising capital online is the only thing to do nowadays. But it is all about building your authority, having your own information, your, well, person, your business, your network being able to grow online. And then you filter that through these investor portals to actually have the conversations and get more deals done.
Love that. What would be the difference? I know we had multiple conversations, and I met Nate back at an investment conference some time ago. Um, But I would love to know, like, what would be the difference between raising money by yourself and like just like trying to start your own fund or anything like that versus doing a crowdfunding lawyer's how would you call it? Like it's a setup for like a one-time deal, or how would you articulate that?
So there's two paths to kind of doing your own projects. One we'll call syndication. I'm identifying this particular business that I'm going to go ahead and close on and acquire. We call that a syndication because the investors know exactly what they're buying. The other one is a fund where I can't tell you exactly what I'm going to invest in, what I'm going to buy, but I can tell you my criteria, the box that I'm going to go ahead and target. And so those are really the two routes that you have. A lot of people talk about roll-ups now. A roll-up is a little bit of a mix in between both a fund, because I can't tell you everything I'm going to buy, and a syndication, but I can sure tell you about the business and the business plan. So that's one of those kind of meshes them both. But you're either deciding whether you can better sell something that you can give the demographics, the profitability, the industry information, or if people just know, like, and trust you enough to give you some money to do whatever you'd like.
Love that. And what does it cost to set up like one of these? Is it a syndication on your end, and you guys are not really focusing too much on the fund aspect, or is it like, from my understanding, last time I spoke to you, it was we can actually do a one-off capital raise for any type of deal that we want, and we can actually start syndicating online to grow capital for that deal. Is that correct?
100%, you nailed it. That's
Perfect.
the entire purpose of setting up, hey, I'm going to buy a business, start a business, develop some real estate. It really doesn't matter what the purpose is. If it's too big for your piggy bank, you're working with investors. There's a lot of rules and regulations that come together for that. So that's where you need that legal guidance and support. Make sure you're doing everything right along the way.
Well, that's exactly why I wanted you on. It was just that a lot of investors, they're just starting out with that first deal and they're not trying to go start this big fund. That's maybe later down the road. And they're trying to just raise some capital for that one off opportunity to get their wheels spinning, right? And that's where I think everybody needs to know what you guys do. Um, but that being said, you guys got to get paid. So I'm curious, like, how much does it cost generally, at least at the date of this video? Like, what does it take to actually set this up for them?
It's generally 10 to $15,000. And that's just setting everything up beginning to end. We do
Yeah.
charge different amounts based on kind of the regulations and the strategy. Some requires more disclosure than others. But unlike most lawyers, we just try to keep everything simple, fixed fee. Here's the deal, here's your strategy, let's roll.
Mm. When you're setting up these types of funds, or I guess even any type of capital raise, what would you say, in your opinion, that most investors that are going to put money into it actually want to see or know before they actually invest into your opportunity?
In terms of your planning, generally having the legalese is boring. Do not rely on anything we put together to sell your opportunity. But having a good pitch deck that
Mhm.
gives those bullet points about yourself, the management, the business, the industry, and the most important things, what the investors get out of it.
Mm. Is there a,
Now, if you can,
oh, I'm
I was
sorry.
just going to say, if you can take that to the next level, doing webinars, doing videos, that is a better way to get investors engaged and interested. But a bare minimum, you have to have that pitch deck or a business plan.
How soon would you say, and I'm assuming probably way before you even have the deal, but like start building,
Now,
yeah, exactly now. So start building these investor relations just before you actually even have a deal, or would it be better to have the deal first, in your opinion?
it's it's a touchy subject because you have to start talking to prospective investors early. You have to line up who you're going to talk to even before you have a deal.
Yeah.
I mean, you get something under contract, now you've got 60, 90 days to actually close on it. And if you're starting with day one, I don't know who I'm even going to talk to. It's too late. You're never going to get it
Yeah.
closed. So
So,
that's where having more of a online presence, building your own community, your own crowd in advance, sharing and talking about what you're doing, what you're focused on, building that authority, building the awareness so people actually know who you are and what you're doing. But then on an ongoing basis, continuing to engage with people, whether it's through newsletters, social postings, blogs. It doesn't really matter if it's you're doing podcasts to educate or entertain. It's just all about making sure people know who you are, what you're doing, and that you're competent to actually accomplish your goals.
mm.
And then hopefully be able to funnel them through a good marketing investor funnel. So you're building a list, you're building your Rolodex. So when you have that opportunity in front of you, you already know who you're calling.
That's right. So when, let's just say you had somebody, they have a business, maybe they have some kind of piece of real estate that they want to raise money for, like let's say it is their first deal or something like that. What would be the, in your opinion, just the way to approach that and start posting online? Hey, this is what I'm doing. This is how I do it. This is potentially what I could get out of the return, or how would you post that online if you're just starting out?
Uh, First step is to build your own brand.
Mm,
What I mean by that is people know who you are and what you're doing. While it's easier to talk about it when you have a investment opportunity in front of you, if you just hit somebody for the first time ever, hey, it's great to meet you, and I've got this closing coming up in a month. Let's talk about you investing. Like you're just going to scare everybody away. On average, there's two averages, at least 6 touches before anybody invests. And on average, it honestly, most investments happen after a year of getting to know somebody. And
mm.
I'm not saying one-on-one know somebody, but aware of them online, following them, checking out their information, their content, or what they're doing. That type of authority, awareness, and relationship. Again, start early.
Yeah. I mean, that just makes me feel more comfortable about our podcast that we're doing. So, um, really quick, like, where do you think beginners make the biggest mistakes when they are trying to, it could be one big mistake, maybe a handful, trying to actually get the capital for the first deal? Is it just like simply not being prepared with the investors, or maybe they're trying to just like, what would you say actually?
Honestly, thinking that you can just go straight from a handshake to a pitch.
Hmm.
It really doesn't work that way, and you're going to lose 99% of anybody that you talk to as soon as you start looking like a used car sales guy. But opening up the opportunity to have conversations where you're doing discovery, you're getting to know a lot more about the prospective investors of what they've been doing, what they're interested in investing in, their time frames for retirement, what their financial goals are. And so really gathering the information and getting to know the investor as well, so that you can lightly first call, sprinkle on the, and I'm working on this deal or I'm looking at this opportunity. But when you're going to actually ask for the money, it's not a one size fits all. You need to be more strategic in your discussion with the investors where you're solving their problem. You're helping them get from step A to step Z. Z is always some retirement or legacy. And they don't really care what your project is. They just care about, are you the right guy to help them bridge that gap?
What would you say on a percentage scale? Would it be like the right investment, the right person? I hear a lot that investors invest into you very often more than
Yep.
the deal, but what would you say is the split there? Is it 50-50 or what would you say?
That's 100% you.
Okay.
It's the know, like, and trust. Nobody ever invests with anybody they don't know, like, and trust.
It's so funny when I reach out to businesses to either partner with them or to invest into their company, and the when they hear that word invest, they love to get on the call with me and our team to potentially get capital right away, right? So it's like, and they'll pitch us their idea, and it'll be just a call about that. And it's funny how you're saying it's like it's actually about that relationship over time. And I've had actually a lot of calls where they're like, "Oh, you don't want to invest anything. That's not what I wanted. Move on." But in reality, is we could have built that relationship over the next year, and you never know what might have happened, right? Um,
And I always look at those conversations as everybody has value.
yeah.
Maybe they're not going to invest directly, but maybe they have a community around them. Maybe they have people that trust them. There's always opportunities to joint venture with
Hmm.
others to get deals done, to use, we call it sphere of influence. If I know a bunch of people, I may be your sphere of influence, but I got to know, like, and trust you before I introduce you to grandma. So everybody has value. It's a matter of figuring it out and creating that relationship, knowing who you're speaking to enough to figure out, are they going to fit into an investor bucket, a sphere of influence, a referral bucket, or are they more operationally fit into your end goals?
Hmm. Is there a possibility um, that you can still help this investor? Let's say it's a business trying to acquire other companies and you ran into them and they're looking for capital, or maybe it's a business just trying to raise capital in general. Is there a way that deal makers like myself and lots of people listening to this can still help that person dodge all the crazy regulations when it comes to like all the capital raising part and maybe connect them to people like you or try to do some kind of deal together where they could still get some kind of incentive in between?
Touchy question, but as you talk to people, and I know everybody has their hand out for money.
Yeah.
Everybody is looking for money. That's the toughest thing to have. And if you have the ability to find and control that, you're the most important partner that they can have.
Hmm.
And in these cases, there are, of course, a lot of regulations around them. You cannot be compensated directly for raising capital. You're just not allowed to unless you're licensed as a investment sales or broker dealer. So the only ways to do it are really if you have your own fund, You can raise your own capital for your own fund to make the investment decisions. That goes to that syndication fund discussion that we had. That's a possibility. The other possibility is to joint venture. Yeah, no, I would love to buy this company, but let's go in as partners. I want this percentage of the business. I'm going to have these oversight or ongoing substantive duties is the legal term for it, but I'm actually involved with the company. But then I can go out and bring my investors to the table. And it's not just like I'm handing over investment dollars. Like I'm also there to make sure that my investors are taken care of as well. I would call that more of a joint venture approach.
I love that. And Nate, I try to keep our podcast here short and sweet, and I definitely want to end right there. And um, I want our viewers to be able to uh, find you online. And I know you have an awesome uh, actual value add you can give to them. Did you happen to have the link for that, or would you want me to just put that into the description?
You can put it in the description, but just so that you understand, we call it the helpful charts. It's regulations, it's marketing guidelines, it's structures of deals, how investor payments end up looking like or legally look like when they're structured. And it's just a good high level information for everyone. You can find it at crowdfundinglures.net/thank-u-cfl, but way easier, I will email it to you so you can be in the comments.
Yeah, we'll put that. We'll definitely put that in the description. And then, is there anything that you want the audience to know uh, when they're trying to go out there? Is this one thing maybe that's we didn't cover in this that hey, you should probably hone in on this?
It's all about making sure that you're prepared as early as possible. There's not a lot of legal legwork that has to happen before you're out there shaking bushes. But before you start asking for investment dollars, you definitely need an attorney on board. And before that, it's smart to have one in your hip pocket because there are a lot of regulations, there are a lot of disclaimers, the ways to approach things. So we're happy to help anybody that's trying to get into the business. But then, where the actual costs end up being is, hey, we've got a project, we got an investment, now let's roll.
Love it. Well, thank you, Nate, for hopping on, and we're gonna put everything in the description. And I want everybody to kind of like actually go out and meet you, talk to you, and email you because one, you're just a great guy for one, and two, I mean, they really need to get ahead of this, and you could definitely help them with multiple deals, but especially the first one. So, Nate, thank you so much.
Thank you. Happy to be here.